Hello everyone, this is Evan from the Trade Risk here on Friday, April 29th with a weekend market recap video. We're first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off the video with some individual names. I'll have trade ideas out later this weekend. Let's jump into it here. Final day of the week, final day of the month. April is in the books and the dreaded month of May starts up next Monday. Let's take a look at where we came from. Start with the monthly chart. This is how we finished the month. You can see bulls tried to push us up there, got to the top end of the range, retested some of these recent highs, and then we pulled off a little bit. Of course, that was coming off a very fast and sharp move from those February lows, so some digestion really isn't all that surprising. We still made progress, forward progress on the month, finished up 39 basis points, and the SPY actually go to the cash market 27 basis points, really what we should be looking at. A slightly more pessimistic view on this candle here, looking at the cash market. If we go back down to the weekly time frame, here's what we looked at for the week, minus 1.26%. Okay, so finally seeing a little bit of sell pressure. However, even on this weekly time frame, there's no damage that really was done at all. I mean, yes, we took out last week's lows, slight little momentum drop for the bulls right there, but we're still above a rising bullish aligned 8 and 20 period EMA. This is still healthy action. Again, it doesn't mean we can't spiral down lower and kind of turn this into a bigger pullback, but at the current state of the market and what we just saw here, this 2-day pullback really just didn't do too much in the bigger picture. Now go to a daily time frame. We started the week again right here on Monday. We tried to keep up. Let's go to the SPY. So we started the week right here on Monday. We tried to probe lower. Bulls kicked us up, and then we tried to, kind of push higher here, and then we swooshed lower, failed at the highs. This was the tell yesterday on Thursday. These failure to hold green and basically, above Wednesday's highs, to give that all back and close on the lows and take out sort of the weekly lows as it was on Thursday. That was sort of your line in the sand, your day to take notice. And then we saw, of course, some follow through today, although the bulls, as you can see, did drive us off the lows. So a lot of just back and forth, pick up in volatility. Now, the few things to note are, one, we are finally convincingly below the 20 period EMA. That's something that I look at and use a lot to gauge trend strength and momentum. So that's the first time we're below that, going back basically until this day right here, back on the 24th, came close in this area, but we held. So we are below it, and we did take out some support, right? 207, which was effectively a breakout area from back here on the 13th of April. We've given that back. We're below those levels. So that should put you in a more neutral kind of wait and see mode, or dial back some exposure, whatever it is you do, depending on your time frame and strategy. You probably do have some adjustments to make on the daily time frame. Again, as I spoke to the weekly earlier, this is more where I don't see the big reason to sort of panic just yet. So again, this all comes down to time frame and how active you are. Just know where you are on the weekly time frame. There's still not much concern. Daily time frame, you have probably something to do or something to adjust. So that's the way we're looking at it. I think constructive bounce off the lows today. I think right down here at 204. This area, if we do see further follow through, probably would like to get tested. This is where the bulls kind of stepped in and supported price a few weeks ago. So keep that level in mind. And really, to just kind of repair this damage, we got to get back above 207, reclaim the 20 period EMA, and that would probably put the bulls back in at least a little more comfortable standpoint. Again, with the bounce off the lows here, let's see next week if we come into it. I think Monday can set the tone pretty nicely. Do we gap higher and just immediately see follow through to the upside, or is it just kind of a gap lower back to the lows here and feeling heavy again? I think we'll get a pretty good tell on that early next week. Now, if we move into some of the other major indices, it's a split case because the IWM certainly still the strongest. You can see above the 20 period, the small bounce off the lows, still down 90 basis points today, but holding up pretty well. Again, this uptrend very firmly intact. Not too much concern here. Yes, we are below this area, this 113 level, which held as support. So it is breaking some minor support, but really not a whole lot of technical damage. If you go to the weekly chart here, here. A whole different ball game. I mean, we've reclaimed this support level. We're nowhere near the highs like the S&P is, so we're just in the middle of a very messy range that probably is going to continue and develop for the next multiple months, if not years. The Qs, certainly the laggard now, the weak sector, the weak place to be, technology. We'll get into that later when we look through sectors. This is where the trouble is. This is now sharply heading lower, the 8 and 20 period EMA. Their momentum is to the downside. It's slashed through a couple of different support levels. Again, small bounce off the lows today, but you can see this is already in a slightly more visible kind of pullback here. If we put some Fibonacci retracement on here from the February lows, we'll kick it from here to here. You can see we basically came into the 38.2, found some support. 50% would be down here at 103. That's where we had some previous levels of interest around 103. So keep that level on watch. That's where we've come from so far. Bears have a little more control in this index, in this sector of the market. So just keep that in mind when you're thinking of high beta and allocation, trade ideas, so on and so forth. Let's move into some other markets, and then we'll get into some of the sector analysis. We'll start with TLT, which found a bid here at the low end of this range, 127.50, clear support area back from early March. Found support there once again. I think you get a nice line in the sand if you want to be long TLT. You use this as your stop, and if you break below there, I think you want to reevaluate. Gold. Massive move today, 2% up move. Again, we were going sideways here, sleeping for multiple months. This uptrend, very healthy, orderly digestion. Unfortunately, I missed this move. Yesterday was probably the day to take notice, and action was Thursday, and then this one just really took off to the races here. Certainly probably helped by the US dollar getting crushed. But if you go to the weekly time frame, you can see here just very, very sort of textbook, behaving beautifully technically, broke this declining trend line, had this big move up, broke the trend line, went sideways for a healthy 8 weeks, 9 weeks, and now it looks like it's on the verge of breaking out once again and making that second leg higher. It's exactly what you want to see if you're a gold bull, so that looks good there. Silver, essentially the same thing. We're looking at a weekly chart here. This is just exploded after taking out this $15 level. It's basically moved another $2 here, which is a big move for silver. It's coming into this point here. If you look at it, $17. This is where some of these highs were back in late 2014, early 2015. Probably expected to find a little bit of struggle right up here, right around $17, but momentum absolutely to the bull side, extended certainly. Just keep that on watch. GDX is also what I wanted to cover too, up almost 6.5% today, which is pretty incredible. If you go to the weekly chart, I know I got some questions on this. $27, that's where this market found some supply and struggle in the past. Maybe it heads up there. It is really extended now, but certainly it's you got to be careful fading something like this because the squeeze and the everybody's temptation to kind of short this here might be just exactly what it needs to move higher. So just be careful here, but $27 on the upside probably has some pure resistance coming in up at that level. Finally, the US dollar, which broke below major support here at 24.50. We talked about this for a little bit of time. Very bearish looking weekly bar. You can see fast moving averages all in bearish alignment heading lower. This is trouble. If you're bullish here, you want to get back above 24.50. Otherwise, I think this is a short. And I think that's it. I think we covered everything. Oh, I'm sorry, USO, oil and natural gas. So oil continued nicely today. We're in this trade. We bought this back here on the 26th. We took half of it off today at the open. Nice win, nice trade. We still have half of our position closed up. We're looking for a little bit more to maybe eke out some more gains on this. It's extended a bit. You can see it's coming into where these highs were back here late December, early January. So expect some pause. Let's expect maybe some of these moving averages to catch up. But the trend right now looks pretty good for USO. And then finally, natural gas saw a nice bid, 4% after closing this gap yesterday. Still doing a lot of dancing around this level. Needs to hold above $7. It was doing that up here and then kind of gave it all back. So we'll have to see how this acts going forward. Now, getting into some of the individual sectors, what was most beaten up basically last week is what came back this week. The defensive areas, XLU, saw a 2.26% recovery this week. Again, we talked about this notion of time frames again. Monthly chart, I know everybody was saying the trend is dead in XLU after seeing last week's 2-day break. Perhaps it did infer that the trend was certainly damaged or slowing on the daily time frame, but depending on where you live in this trade, the monthly time frame, as we talked about, was still very, very healthy. And you can see the bulls want, the buyers are going to step in here and buy dips because the trend is so strong here in the monthly chart. So XLU recovering, staples did recover, but materials held up a lot, quite a bit this week. Did pretty good, closed basically flat on the week, and so did energy. No surprise here, mostly because of the US dollar and the strength of oil. So energy held up pretty well, all things considered. The weak sectors, technology, really rolling over a bit here. Semiconductors rolling over, hit hard, particularly today, and healthcare hit hard also today. So be careful on these sectors here. Maybe we see some type of oversold bounce happen early next week, but just be careful not to overstay your welcome if we do see some type of big trend change there. They are beating up those three sectors, so just be aware of it. There's some opportunity there. So finally, let's get into some individual stocks, go through them pretty quick. Apple, first one. Okay, we had earnings out, got crushed on earnings, and then we saw follow through to the downside. It is at an actionable area. We did see a little bit of life down here right around at $92.50, below $93 as it was coming into these prior lows. That is certainly going to be an important level for Apple. If you go to the monthly chart, you can see it is pulling back here. Had a nice strong uptrend for multiple years. It's pulling back now. It's probably at about the 40% retracement or so. Just throw it on here real quick. Just to see where it is. If we start the trend from back here in 2013, you can see we're basically at the 50% right now. 61.8 would be down around $85. So just something to keep in mind there. See if it holds here. Momentum to the downside, but it's certainly stretched. So there's some opportunity there for you nimble traders. Google also at the bottom end of this range, $700 to $800. I think that's the range we talked about. Google could see itself in for the next couple of weeks, couple of months. If it starts to clear below $700, you got this last pivot down here right around $685. See if that one holds, but it is at a relatively actionable area. Amazon had favorable earnings out, up 10% today, trying to save technology along with Facebook. You can see on the weekly chart here, it's getting back to these recent highs. Looks good, momentum to the upside, big gap here. If technology continues to weigh, perhaps Amazon eventually fills this. Similar to Facebook, had its big gap up off earnings, I think similar, about 10%, 7%, or I guess it opened around 10%. So Facebook, Amazon, both looking good, both have big gaps. Those are tough to work with. You got to let them go sideways, see how they act, let the moving averages catch up, and then see how price action develops from there. Finally, Twitter, still a mess. It was actually looking fairly constructive in here prior to earnings, and then it just got smashed over the head again. Really is just a poor looking stock below $15.50. It's got to get at least back up into here, reclaim some of these pivots, get back into this old range. Then it can, at least move mildly constructive. Otherwise, I think it looks like it's in some trouble there. So that's what I have for today's video. I'm going to have some more trade ideas out specifically later in a blog post or video. As always, guys, if you like the videos, do subscribe, bottom right hand corner. And thank you for watching. I'll catch you guys next time.